Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some bulletin board hero stocks amongst private investors on Friday, July the 18th. And we've seen quite a flourish here on the daily chart to rare earth minerals, a rebound off the former June 1.18 pence resistance, which is also resistance in November. As we know from charting rules, when old resistance becomes new support, you've got a bullish situation on your hands. There's also RSI support in terms of an uptrend line running through around the 55 level from the end of April. So that's a positive as well. And really, what one would expect now is that while there was no end of day close back below the June high, which ties in quite well with the 20-day moving average at 1.22 pence, we'd see a partial or even full retest of the best levels seen earlier this month towards 2 pence. Of course, we also have the old August 2013 high at 2.4 pence in focus if we can sustain the 2 pence level later in July or early August. Moving along to AFC Energy, where there was quite a sharp push to the upside yesterday on Thursday. The good thing about this situation here is that it looks like after the gap to the upside, even though we failed at the 200-day moving average at 30.8 pence, support has so far come in towards the former June resistance zone around 28 pence. And we also have the ability to use the floor of the July gap, 26 pence, as the end of day close stop loss in terms of people deciding to go long in the wake of what has been quite a sharp bear trap rebound from below May support around the 21 pence level. So to sum up, as far as AFC Energy is concerned, above 23 pence, the gap floor, we could see a best case scenario target here at the top of a rising 2014 price channel at 40 pence. Time frame on such a move, probably the next 6 to 8 weeks. If you're cautious on the shares, you might wish to wait on a sustained break of the 200-day moving average, currently at 30.8 pence. Finishing off with Leni Gas Oil, where earlier in the month it looked as though there may be a period of weakness or a consolidation for the shares. This looks like it's been worked out of the system here. The low it was over recent sessions has been towards 3.25 pence, and we've bounced off the floor of a rising trend channel from the beginning of June at 3.4 pence, or we have that support in there at the moment. There's also a line of support in terms of the RSI oscillator running towards 50, and the RSI itself at 56 gives what is a de facto buy signal. If you're cautious on the shares and still think that there might be more consolidation around the 3.5 pence level, you wait for an end of day close above the 20-day moving average at 3.78 pence before going long. The target here above the 20-day line would be towards 4.8, 4.9 pence as soon as the end of next month, or at least the month following the buy trigger on the shares. That's it from me. More updates at spreadbetmagazine.com.